I'll probably start by saying that there's very few lines of insurance today which have the increasing frequency of incidents and exposures in statistics that we're seeing in relation to cyber risks. So it's really becoming a new exposure that a lot of entities are taking note. And it involves a number of stakeholders, and that's a very important point, that it's no longer just an IT responsibility in an organisation. It is something which you need to engage all stakeholders in the business, whether it is legal, whether it is communications, marketing, risk and compliance, as well as CFO and CEO. So it is a very important area that is now becoming pertinent to both company boards and risk committees. What I wanted to talk about really was a methodology to understanding how we go about assisting clients understand this risk, which is not just about cloud computing. It actually grows to include a whole lot of other cyber risks. And really the three-step methodology is about risk identification, risk control, and finally risk transfer. So in terms of risk identification, it's important to understand what your actual risks are. So what is the impact of a breach, whether it's a cyber-related breach for hacking, activism, or if it's cloud computing as a result of a third-party provider. And you need to then look at, number one, your brand and reputation. What is the impact of that on your company? How is that going to impact your share price and also your engagement with the public and other stakeholders? You also need to look at the financial losses that may follow. That could be increased compliance costs. It could involve increased regulatory scrutiny. It could include, as the privacy amendments have gone through, powers for the Privacy Commissioner to levy fines and penalties, as well as force companies to undertake enforceable undertakings. So there's a lot of changes that businesses need to understand in terms of understanding their exposures. In terms of risk control, that's really about understanding how you're going to mitigate and control the potential exposures. So, for example, when dealing with cloud providers, you need to understand really who your partner is. Where are they located? Where is the data being sent and how is it being used? How is it going to be accessed? What are the contractual requirements? What are the indemnities being provided? And also, if the contract ends or you decide to change providers, what happens to that information which is currently stored? So these are all important aspects in terms of understanding how you control it. Finally, it's about risk transfer. So really, what is the insurance transfer mechanism? And I clearly see that there's two ways that you can go about it. You can first of all enhance your current insurance. The problem there is that conventional insurance programs typically do not allow or provide the breadth of cover that the cyber risks of today are presenting businesses. And what I mean by that are the type of exposures, for example, professional indemnity insurance, where there are certainly limitations in terms of what your professional activities are and how that correlates to the potential exposure to your business in terms of managing your network and systems, in terms of how you engage with your clients, as well as also the internal information. So you may hold employee data. Again, those type of covers aren't particularly or normally covered under a professional indemnity policy. And when you look at the other general lines of insurance, those policies tend not to cover intangible losses. So what we're really finding is a big gap in conventional insurance programs and what the cyber risks of today are presenting. So really, the next step is then to look at what sort of new policy coverage is available. And there are a number of insurers out there who are presenting a broad range of cyber risks, which include business interruption, which obviously can impact a business or assist a business in the event of a breach, or if your third-party provider goes has a data outage. So it's important to understand that. It's important to understand that the policy also covers other first-party costs, such as notification costs, which aren't compulsory, but certainly I think good governance and good practice would probably suggest that you do have a policy in place for notification. The type of policies out there also cover a range of other third-party claims that can be brought against you, whether it's privacy breaches, defamation, breach of intellectual property rights, and then also engaging forensic consultants to understand where the breach has occurred. So there's a broad range of cover under new cyber policies, but not all policies are the same. Different policies in the market have problems. For example, what is the jurisdictional or geographical exclusions or limitations, especially considering cloud information, which is being sent all over the world. Secondly, you need to understand, are there war or terrorism exclusions? Because very often it's very hard to determine if a breach occurs or if someone hacks into your service provider or into your own network, whether it's as a result of terrorism or whether it's a form of hacktivism. A third important point is also understanding the definition of network. So is it broad enough to cover a range of other networking systems, including iPhones, iPads, laptops, etc. So you really need to understand the different policies in the market, and then as a result of that, tie it to what your business risks are and find a solution that will basically mitigate that risk in the event of the breach.